What is going on, Future Focus family? My name is George. That's Matt, and we go live to help you make money investing. Today we got a lot to talk about. It's been a while since Matt has been on the scene with us, so I'm glad to have you back. Yo, Matt, how you doing, man? How you been?
I'm doing great, man. Got
I
money
know we
on
got
my
a
mind.
lot to talk about. Uh, Tell us what you've been up to, man.
Just trying to transition out the military. I was taking my CFA. Trying to see if I get some finance jobs on the way out, but
Okay.
had to buckle down for a little bit. But we're
Anything in
back.
particular, like any particular job you're looking to get, or a particular company you want to work for, or bank, or what?
Um, I've been so busy. I started applying to the Federal Reserve. Um, I did some private companies too. I did Chase, I did Jeffries, but
Okay,
I'm gonna go hard. I just started. I just started. I'm gonna really crank it up. So I
that's good.
just started.
Well, I have no doubt you got great things in store for you in your
Thank
future.
you. I appreciate that. Thank you.
As of right now, the S&P 500 is up 1.62%. The Dow is up 1.13%. The Nasdaq is up 2.64%. You have the Russell 2000 that is up 2%. Crude oil is down off those crazy highs. It's back down to $95.41 per barrel. You got gold that is coming down a little bit. It's still holding above 1900. It's at 1910 right now. You have silver, which is down back to the same price it's been for a while. It's at $24.76. You have the 10-year bond, which is above two, which is above 2% is a pretty big thing. We're sitting at 2.16%, which is kind of crazy because the last year, anytime the 10-year has been going up, the S&P 500 and stocks have kind of come down. However, that's not the case today. There's kind of a rally. I still think we're heading towards a bear market, and just know that in bear markets, you can have bull runs. There can be a bunch of green days in a row inside of a bear market. So don't get too excited. I would not be a buyer today. I was not a buyer yesterday. I was a buyer on Friday. I bought about 300 shares of Didi. I just thought it came down way too low. I'm not heavily invested in China, but I do believe in Didi. I think they're past the point of being oversold. And we got some news on China today that I'm going to share as well. We have BTC, Bitcoin is up 4.53%, and the crypto index as a whole is up 3.76%. So we got the Nikkei, that's 1.64. It's up today. So what did you want to discuss? But before we get into the news and stuff, what was it the stuff that you wanted?
I mean, it's so much. It's so much. I was
I
gonna
know
let
it's been
you.
a while.
I was gonna let you pick, but let's take the elephant out the room. Let's talk about
Okay.
interest rates today.
Got you.
Where they're
Yeah.
going. Does it make a difference? What do you think Powell is going to do? Um, why can he do it? Why can't he do it? Am I missing anything? Um, yeah, let's elaborate on that. I think that's enough.
With the way the market, when this today started, because they're having a meeting today, that's why he's bringing it up. The Federal Reserve is meeting today to discuss possibly at this meeting raising rates. Some have speculated that anywhere between 5 to 7 raises this year for basis. Um, Matt has been in the camp that these are not going to be raised at all because we don't have the foundation to raise the rates without putting ourselves deeply into a recession or even a depression. Am I right? Am I saying that right, Matt?
I think so. I think so.
Okay. Um, with today's market action, so yesterday and today combined, the market has bounced back about 4%. I think with that market action, seeing that there's still some bullishness in there, that that could fuel them to raise it to 0.25%. Why can't they? Well, this whole thing that's happening with Russia right now is affecting us directly here in the United States because of fuel. So, Russia was the second largest producer of natural gas in the world. They delivered the second most gas, and they were the third biggest deliverer of fossil fuels or So they're second and third. Taking them out of the equation and putting sanctions on them, it hurts us too. So it's not something that's going unnoticed. Not only that, we've had inflation that's been rising. I think we're at 10% now. Uh, so last month it was 7%. I believe this month it jumped up to 10%, which is insane. But I'm sure if you've gone anywhere to buy anything, you've noticed it. I've seen the pound. I've seen a ground beef, a pack of ground beef. Uh, we purchased that about once a week. The packs are like $3.25, and this Sunday when I went to purchase it, it was the most expensive one was about $7.50 for a pack of ground beef. So
So
that's
it wasn't transitory?
no, but they got rid of the word transitory back in November. They
Oh, the
they
word I
took
never
that.
bought. The word I
They
never
t-
bought from the get-go.
nah, you did it. You did
After
it.
they printed trillions. I mean, it doesn't take a genius, to see what's coming. You print more money than ever printed in American history in 1 year, and then the nerve to call it transitory, and I'm supposed to buy it like the 1% bonds?
Yeah.
Not gonna happen.
No, you're completely right. You're completely right and accurate. They took that word out of the vocabulary. They said they were no longer going to use the word transitory because things became more and more obvious that it wasn't transitory. And listen, it's not all on that pandemic that happened. There's second, third, fourth hands effects. The pandemic was the micro event that caused a lot of things. But when you look at things from a macro lens, we know that back in December there was stoppages at the piers, the Santa Monica Pier, the piers on the East Coast. They were all stopped. You had ships like miles and miles down the coast that couldn't offload their goods. So there's things that caused to prices to go up for certain things, and everything's correlated. So jumping on that, I'm gonna read this article for you guys. We go through it. It talks about what Matt is kind of wanting to get at. So we can see if this answers any of our questions that we have towards what's going on here. So the key points here in this article is that the Federal Reserve expected to end its 2-day meeting Wednesday with its first interest rate hike since 2018. After raising rates by a quarter point, the central bank is expected to forecast as many as half a dozen increases for the year. Like I said, about 5 to 7. Some Fed watchers are saying the economic outlook is so uncertain that it may not be able to raise rates as much as it would like. The Fed chair, as we all know, Jerome Powell, could be aggressive about additional rate hikes when he discusses the need to boost rates because of spiking inflation. So the last 2 years, we've seen that he has not been aggressive at all. He's been probably the most passive Fed chair that we've had. I mean, what do you think? Would you agree to that?
Um, mm, if you want to go by the past 2 years, the argument could be made, but this is the same guy that tried to jack it up. And I say that he really wasn't trying to jack it up, but he was doing a steady march and the markets crashed. When was that? In 2018, in
Yeah.
November 2018. But I just wanted to touch on the point you made. So, I was in the camp that they were going to raise rates at all. I could very well be wrong, but I will come back and say this. If they do, it's not going to be by much. Um, we're having 1970s inflation, but the difference between today and the 1970s, we didn't have so much debt. So they could jack it up, right? They could tame inflation. They could use the tools in their toolbox. They can't do that now, man. Like people, this new debt people are taking, they're trying to service old debt. So imagine jacking those rates up. They're really in a lot of trouble. I'm not going to say they're in trouble this year, next year, but having debt, right? Think about it like this, because we give a lot of leniency to the dollar. But think about Dave Ramsey, right? And his principles. I'm not a fan of Dave Ramsey, but think about his principles and how it's not applied to the US government. You can't have debt and then use money printing as a solution and then want to tame inflation. It what's going to happen to that previous existing debt that you have to service? So they're stuck. I think the world knows it. I think I don't know if you're ready to turn to the next topic. I think Putin knows it. That's why this war is more than just a physical war. It's also an economical war. But bigger than that, it's a commodity war. But I'll let you drive the discussion.
No, and you're completely right. So the rest of this article, let's see. Federal Reserve is expected to raise interest rates by a quarter point. Fed watchers expect the central bank will also provide a new quarterly forecast that could show as many as 5 or 6 more quarter point hikes this year. Just going back in time, just tell us, Matt, 2018 when the rates were raised. I know we talked about it a lot, but let us know like what happened in 2018 when rates went up.
So in 2018, Powell wasn't doing anything. And this is the thing. He gets beat up a lot. But in this point in time, he wasn't doing anything uncharacteristic. This is already, think about it like this. This was years of low interest rates. This at that point in time, you're looking about probably 9 or so years of low interest rates. So he's trying to raise it back. So at the time, I think all throughout 2018, he was raising it by a quarter point. Every quarter, he was raising it a quarter point. And the market was cool with it until the last one. They was like, hold on, this guy's not going to stop. I don't know where this is coming from. And ironically, Facebook lost, I can't remember at the time, it's like 150 billion market cap, right? I know they did it again this year, but it was the same situation back then. Like I want to say 150 billion in a span of a week, something crazy.
Well,
So,
it's been a lot more since then. They've lost,
okay,
I believe, so far year to date, they've lost about 500 million in market cap.
wow,
500 billion
billion.
in market cap.
That's crazy. That's
Yeah.
crazy.
So
But I and then this brings me to my little beef. I don't get the Kathy Woods, buy, 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 buy. It's absolutely, there's times to go tech in your portfolio. This war should have been a wake up call. Sometimes you got to be defensive, man. And I don't know if you want to count this as a black swan event. I've been watching how it's early, right? I hate when people say this. It's early, but all the crypto people start to think, well, wow, maybe they can shoot satellites, maybe they can shoot towers. Like, wow, like what, it's very convenient, but what happens in that scenario? So you have to think full picture. And ironically, I do think tech is going to do well. But to cover your point earlier, you could still have a bear market even though stocks are going up, and not just like 5 green days. They could go up in a way, but that's a melt up, right? If the dollar's losing purchasing power, it could be like the Venezuelan stock market. Not saying we're there, but a bull market is not necessarily a bull market if you're losing purchasing power. That's an important factor to put into the equation too. So
yeah, definitely.
mhm.
Russia's invasion of Ukraine has made already hot inflation worse and has created more risk for growth. What's more, the pandemic may have subsided in most of the US, but it's raging in China, where there are lockdowns that threaten more supply chain disruptions and slower growth. Uh, Morgan Stanley says there's a dark cloud of uncertainty over this meeting, but at the end of the day, they know they're at zero. So, I mean, they can't go down from here. The economy is coming to full
I'm
employment.
sorry, what was that? They can't do what?
I guess they can, but they don't have
Oh,
they don't have a
okay.
justification to do it. Um,
Okay, because we seen the world go down from here. All right, I just want to make sure. All right, continue, sir.
because of the employment rate, basically the rest of this article is because of the employment rate where it's at, it's been hot. You add that all up, and it means that they've got to raise rates. So
Mhm.
basically, they may feel like they're in a place where they have to raise it. They told us what they're going to do. They did that to get rid of the uncertainty. So that's just one piece of the puzzle. That's the Federal Reserve. Uh, we'll see what they do. We'll discuss it in retrospect, and we'll see what they did and see it went like towards. You think they're gonna raise anything at all during this meeting?
This is a tough one. You know, it'll be interesting to see if they use the war as an excuse. They kind of have to, because if they don't, then they're going to signal, okay, we have bigger problems, right? So this is almost like a as we call it in the service, a dog and pony show type of raising of the rates. But you got to remember, if I raise it half a point, you mentioned 2.5. I personally don't think they're going to get there, but let's say they do. If inflation is at 7.5, you mentioned 10 earlier. Let's call it in the middle. Let's say 8%, right? Or 8.5%. What the hell 2.5% is gonna do? You have to catch up to real inflation at some point. Like this, unless we're seeing, keep in mind in the 70s, not only did they catch inflation, they had to go a little bit higher because they were
Yeah.
behind the ball, right? So 2% is not, that's not even during normal times, like pre financial crisis. '08. 2% is 5% has been like the norm. 2.5, what is that? So I think I
Um,
don't like it coming down the pike. I don't like it.
I could see a 0.25 rate hike this meeting today, but we'll
Mm,
see. We have two pieces of news. I'll start with the crypto one since you brought up crypto and what's going on in Russia with the whole crypto thing. Um, some people in Russia, this has been the only cryptocurrency has been the only way that they've been able to receive money or use money because they were taken out of the SWIFT, which is the way that the Russian banks communicate with other banks around the world. They were removed from that. So a lot of Russians have relied on cryptocurrency in order to get through day to day. So it's kind of a bullish sign. Biden may have seen this because he signed a currency executive order hoping to advance a digital dollar and other innovations. So President Joe Biden signed an executive order on Wednesday, mobilizing the federal government to create a strategy for digital assets like cryptocurrencies that promotes innovation in the industry while minimizing risk to Americans and the global financial system. The order directs the Treasury Department to develop guidelines for Americans trading and using cryptocurrency that aims to help them avoid fraud or market volatility. The Treasury will also do further research on the potential role of digital assets and blockchain in future payment systems. And what they mean by this is digital, uh, the the digital coin for America, so the CDBC. Fundamentally, an American approach to digital assets is one that encourages innovation but mitigates the risk to consumers. And this is something that people in the cryptocurrency, like the whole market, are been looking for. Whether it's a negative stance or a positive stance, they've been hoping that they take a stance whatsoever. And this is a bullish sign. Not only did Biden sign it, but Senate uh, gives the final approval to aid Ukraine in the huge budget bill. This is something that's. What do you think this does to our inflation, Matt? Uh, there, let's see if we can find the number. Here it is. We're going to give them a 13.6 billion emergency package of military and humanitarian aid. So there you go. There's your dollar getting weaker every day.
mm.
Uh,
I want to touch on the crypto piece. I'm gonna put on my crypto bull hat for a second. Let's say I was a crypto bull, if you will. I don't like that, man. I don't like this executive order. Especially, I wasn't really completely sure what it was, but when you read that sentence of control volatility, that is how they stifle markets. Like, I'll give you an example. You see that with the commodities, right? Um, you see that with all the everything that they have ETFs on. They prevent you from buying, or they sucker investors to buying an ETF. God knows if the ETF is doing what they're supposed to, going in there buying more crypto. It's almost as if, you know what? let me entice him outside of the club so he doesn't have to go into the club situation.
Yeah,
And you see it this week with the LME. I don't know if you've been following that, but they just came up with a new rule. So long story short, nickel went up like 600% in one
I
week,
saw that. Yes,
right?
sir.
I'm not gonna say what's coming behind that. Wink, wink, cough, cough. But um they came out with a new rule and they said, hey, we're shutting down markets. By the way, we got to talk about that. But we're
Yeah.
shutting down markets for any fluctuations higher than 15%. And at what point, and I want to hear your opinion on this, like, is this going to have long-term effects? Because messing with the free market has never really been, I that type of stuff backfires when I look at history. But I just want your opinion on that.
Yeah, so if we're talking about the same thing, I saw an article about that. They had to stop the selling of nickel because something went wrong. Like there was a mistake, some digital mistake, so they had to halt all the selling of nickel. I'm I was confused by that. If what you're talking about seems different, it seems like the same thing the stock market does. Whenever it gets too hot or too cold, they have those triggers that stop the halt, just to avoid it from getting too crazy. If they're adding that in the nickel market, I think they foresee some sort of uh, big event happening where people are
Mm.
are gonna try to do that. I wonder if this is gonna apply to all the precious metals market, or maybe all markets as a whole.
You're spot on. But I just wanted to clarify the nickel part. So no, it wasn't a mistake. One of the big brokers from China went short all these markets, and that's why, again, putting on my Bitcoin bull hat for a second, that's how they control commodities. They short and create extra supply by shorting it. And what happened with nickel was pretty much a GameStop type moment
Yeah,
where people went long on the trade and they forced they forced those who were short to cover their,
their positions.
covered
Yeah,
it, right, and that's what happened. Um, and then the market proceeded to shut down. Literally, it stopped trading for the next 4 days. Right. I think today is supposed to be the first day back that they trade. Today, yeah, today. And then they came out with these new rules, but I don't know. You cannot, just like everything is a microcosm, right? So the way I look at it, what happens in the sports world kind of happens in our world, specifically in the office, right? Like the way I feel like LeBron, like I've been playing for the Marine Corps. Hey man, maybe it's time for a trade, right? Say the same thing with the market, or the same thing with the money printing. They think that, okay, we could solve our problems with printing money. Okay, we could solve the commodities issue by making more contracts. And all you do is set yourself up for the GameStop squeezes. And then when it goes past, because it will go past 15%, you're just gonna add more. What's the word I'm looking? You're gonna lose faith within that within that industry. Some brokers are saying they're never trading on the paper markets again. And it's just gonna add to more hype. They're gonna say, all right, we're gonna force you to close your market, and then we're gonna let the real market decide the price. Because all we gotta do is pass 15%. So you gotta let the free markets be the free markets. Have to. That's my opinion.
I totally agree, man. You shouldn't stop people from being able to get what's rightfully theirs. Um,
Mm,
you know, and if you want to purchase something, the purpose of a free market is that you should be able to purchase that thing in a free way. And that's one of the big things, one of the big reasons we have agency that does that. You have the SEC who steps in and makes sure that it's fair trading for everybody involved in the market at all. Um, So the adoption of a US CBDC could be fundamentally alter the role of both central and commercial banking. And this is one of the bearish things I don't hear people talk about, but I could see something bearish where um, the same exact, history repeats itself. So when we got removed off the gold standard, um, people had to, turn all their gold in, or they were punished. So people turned all their gold in, and if they didn't turn it in, before that you had the prohibition, you had alcohol. If you had any alcohol at all, you had to turn it all in. So what if that happened when the CBDC is finally put into place, and you had to turn any cryptocurrency you had, they made a law that says you have to turn all your cryptocurrency into the CBDC by this date. And if not, you'll lose that cryptocurrency, or that asset will be forfeited or something like that.
So if we're gonna play that game, I think there there's ways you could get around it, right? So I think having that cold storage. The only problem is you won't be able to go online, at least not in the same country. But nonetheless, if you have that cold storage and you go to Canada, right, that might be a way to circumvent the system.
Yeah.
You go to another country that doesn't have these regulations, that might be a way. So that I have to give credit for. Cold storage creates that possibility of circumventing the system. I think gold is a little different. You could still kind of trade almost like I want to say they call them the speakeasies, like how they had alcohol and in the shadows and the secret pubs. I'm almost certain gold operated like that, like it was for barter, because there's no way you could digitally track it or monitor it. Like it's tangible, so as long as you're out of sight with cameras and things, you could transact. I think with crypto, you have the cold storage. You can transact because everything's online, but you will be able to take it to another country and circumvent that. So,
All right. So what I pulled up right here is the chart for the S&P 500. This is the 1 year look at the chart. As you can see, we've come up the highs. Um, there's different patterns. Technical traders look at different patterns when they're analyzing a chart. And one thing that could potentially be forming here is something that's called as a head shoulders pattern. So now whenever you look at a chart like this is what you have to look for. So you see this right here. This could be considered the shoulder. This could be the neck. This would be the head of that head and shoulders pattern. And then this would be the other shoulder. Anytime you have a shoulder or the head and shoulders pattern, all it's doing is reversing the prior course that it was on. So if you had a bullish pattern that it was on, technically what will happen here is that you could be on a negative trend. And this negative trend could extend as far as the positive. So if you did that and you went back to when this bull run started, um, we could see this period of consolidation here. So it didn't start here. It technically started around here. So if you come here, we would look at a price of about 40.78. This is what I think the resistance is. But even though we're having bull days, if you look here, right at the end of this pattern, you have two green days, which is yesterday and today. Um, just because you have those green days doesn't mean we can't go back down into a continued trend of bearishness. It all depends. It could all start with what is happening right now with the Federal Reserve. That meeting could conclude, and Jerome Powell can say, hey, we're going to raise it zero point 0.5, half a basis point. So we're going to go 0.5. So that would have huge implications for the market that I feel would be extremely bearish and would continue this trend and would go down to at least 40.78, but if not, surpass it. Taking a closer look at the 6-month chart, this is not a healthy looking chart whatsoever. And the S&P 500 is supposed to be the best, biggest stocks, but this is not a full depiction of what's going on in the full economy, because Apple and Microsoft are a big portion of this index, and they have not down as far as the broader market. There's about 7 sectors in the S&P 500 out of the 11 sectors that been in a bear market or are
Mm,
coming out of a bear market. So just because the S&P 500 is not in a bear market doesn't mean that we're not in a bear market overall. That's not
mm,
where sentiment is. So just take a look at that. One of the things I need you to understand is that you can still be a buyer. Just know what you're buying, because there's stocks that are down over 70%. You have PayPal, which is down over 70% from their all-time high. You have to take a look back and understand, is PayPal going to be like what do you think? What are your thoughts on PayPal, Matt?
I think everything you said. I like the I like the commentary. In regards to PayPal, I think it's a bit early. I wouldn't buy because I want to see the rest of the fintech community. PayPal is great. It's great. It's something that I use on a regular basis, but I just want to see what else fintech has to offer. It doesn't sweep me off my feet. I don't have to get it today. I probably wouldn't get it today. It's not. I will hold off. I will hold off on it, but yeah. Um, it could fall further. It could rebound. I don't know, but I'm not gun ho about it. Let me see.
Can you hear me, Matt?
Yeah, 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 yeah.
All right. So my fault, brother. I got a phone call. I was on
Mm.
I gotta head out. But thank you
Okay,
for
okay,
joining me, Matt. We hit some great topics, some stuff to
okay.
sit back and think about. We went over the 30-minute threshold, but
As usual.
no matter. Time flies when you're having fun. Thanks again for joining me, Matt, and we'll do this again. As always, invest in us and press that like button. Invest in yourself and smash that subscribe button. It costs you nothing. Until next time.
Mhm.
Later, Matt.
Later.